To get the latest on what's moving markets over in Kenya, we chat to Samuel Wachira, his general manager of Francis Drummond and Company from our studios in Nairobi. And Francis, the market has just opened in Nairobi to news that the Capital Markets Authority has approved the listing of CIC Insurance. The price is at 1 shilling per share each. It's going to be listing by introduction 2 billion shares. What do you make of this news?
Thank you very much, Larry. Definitely that's news that we have been waiting for, especially because in the recent past we've seen CIC positioning itself to be able to take advantage of the opportunities that is there in terms of the market, especially in terms of what was mentioned earlier, unlocking value as well as price discovery, which is a very positive sentiment. Hopefully we're going to see a lot of activity on that stock, and once it's listed, especially if at all there'll be a lot of availability, we should see a lot of activity on that counter.
How do our other insurance companies listed, most notably CFC Insurance and Pan African Insurance, do, which can be an indication of how CIC is likely to perform?
Well, I think the most recent that we can look at right now is British American, which was listed towards the end of last year, and we have seen it not perform very, very well because, I guess, of the challenges that we saw last year in terms of the insurance sector as well as the investment sector. But looking at it in terms of CIC particularly, I guess some of the areas of focus could be Cooperative Bank, which owns a significant stake in CIC, and also in terms of, just like you mentioned, Pan Africa as well as Jubilee and other insurance companies, which have been able to take advantage of a lot of opportunities that are there, especially in terms of the life cover. But in terms of general insurance, I guess that's a bit of a challenge for some of these companies, but their venture into investments and investment income definitely tends to show up their performance. So hopefully we should see positive sentiment in terms of how the counter performs.
And listing by introduction is a good thing because then you escape the headache of doing an IPO and all the work that comes with that. So do you think this is well advised?
Well, definitely look at it in terms of the cost as well as the due diligence procedure for doing an IPO, especially in terms of the marketing campaigns and these other concerns that would end up hurting the cost in terms of how it goes forward. Definitely is a bit of an issue, but I guess the challenge for them right now is to make sure that there is sufficient liquidity of the stock. And just like you mentioned, 2 billion shares being offered in the market is very good in terms of liquidity, which is a good signal going forward. And an introductory price of 1 shilling definitely is also low enough for people to be interested in terms of getting into the stock.
All right, overall, the Nairobi Stock Exchange appears to be on a high right now. We're hitting record highs to some point. You're telling me earlier we haven't been, as, let's say, for the 20-share index, we were last there around August last year. How's this playing out?
Definitely looking at it in terms of how the market is performing, the sentiments are very positive. A lot of foreign activity, which is very positive, especially in a pre-election year where we see a lot of investors being a bit cautious in terms of how the market performs. But looking at it in terms of the macro environment, you're seeing interest rates on a lowering trend, and because of that, I guess there's a bit of a shift into equities, which is good. But even in terms of the numbers that are coming out at the river mining and others, just to mention but a few, definitely also creating a lot of interest in terms of how the market is performing. As at now, some of the interest that we are seeing could be because most of these counters are trading come dividend. You're looking at Kenya Commercial Bank, which books closure is towards the end of the month, and definitely because of that, we're seeing a lot of investors trying to take a position so that they can be able to be counted in terms of the dividends.
All right, and let's talk about Uchumi, for instance, supermarkets. We talked about this a few days ago. It's opening 3 more branches in Uganda, and there seems to be a lot of interest on this stock right now.
Well, looking at Uchumi, definitely in terms of the price to earnings ratio is one of the things that are actually interesting a lot of investors, especially in terms of the demand for that counter, because looking at it in terms of the region, in terms of the placement, there's a lot of opportunity for them to be able to take advantage, especially just like you mentioned, getting into the region is opening a lot of opportunities for them in terms of performance, especially in terms of also the operational efficiency, which is good. But right now, I guess the other challenge would be liquidity on the stock. There hasn't been a lot of availability, and because of a lot of foreign demand, the stock has tended to be pushed very high, and right now it's trading on an optimally high price.
Is there an element of uncertainty about the election that is affecting performance right now at the NSE?
Thank you. Definitely, there would be a concern of political risk, especially in terms as we near the electioneering period. But looking at it in terms of the fact that we have a new political dispensation, there's some level of stability on that front, and also anticipation, especially in terms of the confidence and the assurance that is being portrayed in terms of ensuring that we'll not have the level of instability that we saw in 2007. And so, definitely, because of that, we are seeing a lot of people trying to position themselves very well in terms of taking advantage of the low performance of the market. Because even though we are doing well, we are still not as high as we were last year. So definitely it's another sentiment that we are looking at in terms of taking advantage of the market. And going forward, I guess the political risk might still be there. But in terms of what we are seeing in terms of the Hague process, there's a bit of stability in terms of assurance that we'll still have a smooth period, definitely.
In the economic survey out yesterday, Samuel, the government downgraded its growth prospects to between 3.5 to 4.5%. What do you think this says about the Kenyan economy right now?
Well, 2011 was a very challenging year, you must admit. Look at it in terms of the foreign exchange market, in terms of the rainfall aspect. But look at 2012 and especially their projections. Definitely, it's a more realistic approach, which is welcome. But still, 4% plus is still a good indicator in terms of the economy, especially with the backdrop of knowing that we have general elections coming up and other concerns that have really affected the market in the first half of the year. And so going into the second half, we are seeing rains are coming through, and hopefully the fuel prices will not really skyrocket as much in terms of the inflation levels, and definitely going forward you should be able to still sustain some level of growth. But definitely that does point towards people being cautiously optimistic in terms of how the economy performs.
What are the greatest risks to the Kenyan economy right now which might hamper this kind of prospects for growth?
Well, inflation is one of the major things that we've seen are causing a lot of concern, and that's why the CBR has been kept very high as at now. We're also looking at it in terms of the fuel prices, which is also a major concern as at now. And definitely the behavior of the climate and the agricultural sector definitely is also affecting how the market performs. And of course, the underlying factor of the political risk, which is definitely another concern for economy.
And the government needs money, so it signed a syndicated loan, $600 million yesterday, and at what many consider to be the best interest rate out there, 4.75%. Would you agree?
Well, looking at it in terms of the government, definitely this is a good indicator in terms of, first of all, investor confidence, because with a rating of B+, definitely, and also being able to secure financing from outside is a good indicator in terms of how the market, how the government is being placed in terms of going forward, which is a good indicator in terms of how the Kenyan economy is doing. But look at it in terms of the liquidity levels as well as cash flow balances for an economy like ours. I guess what we are seeing is that the central bank is trying to reduce in terms of local borrowing, which is a good plus, because the private sector now will be able to get access to local funds, because the government is not competing for the money that's available on the local market. I guess the concern now will be to make sure that they balance out that so that they don't pour too much money into the economy and fuel the inflation that's already a concern.